30,470. I think that's what I have.
I'm sure for just the deposits in transit and the outstanding checks. Let's do those first.
Oh, okay. I think the outstanding check I had. The bank deposit I had 5,200.
Yep.
And the other one I had 5,700.
Yep, that's it. Okay, so April bank deposits, we had 15,100. And we had now some of those deposits were from the previous one. So deposits in transit. Okay, so of the bank deposits for April, they had 10,100. So I can put the April. $15,300. So they must not have collected the difference between those two. Oops. It's be 5,200. And the same thing down here. Okay, bank checks cleared were 16,300. $6,000 for outstanding checks from March. Oops. And the book checks was 16,000 even. Difference is 5,700. Oops. Okay, now I'm going to show you guys how to be lazy. Write this down. This is something you can use your entire life. Copy and paste. Change the numbers. What did I do? I just do it here. Second. Oh, goofed up my thing. Okay, new plan. Okay, sometimes being lazy, yeah, it isn't the right way to go. That's what I really meant to tell you guys. Don't be lazy. That's what I meant to say. Okay. So let's see here. We have the bank balance. Deposits in transit was 5,200. Standing checks were 5,700. And those are really the hard part on this one. Deposits in transit were, let's try that again. Let's see, collection of note was 2,400. Hopefully, we get the same number over here. Yep. And there will be one of those in the test. Top part here. Okay. I think we did the rest of this, didn't we? Yeah, we did.
Yeah, it's okay.
Okay, well, the next thing we're going to do is, okay, here I am. Next thing I'm going to do is, so next thing I'm going to do is the multiple choice questions. There are only 5 of them. for this chapter. These are actual multiple choice. These are actually AICPA questions that appeared on CPA exams. Up until 1996, there was an open exam. I think I told you guys this. You know, they'd give you two forms. You went in and take the exam. They'd give you the exam, and then they give you an answer sheet. You turn in the answer sheet. That's what they would grade. And then this exam that you actually just took, you'd put in an envelope with your name on it, put stamps on it, and give it to them. And a couple days later, they would mail it to you. So you'd actually see the exact exam that you took. It was all done in pencil and no calculators. You could not bring a calculator. So anyway, there's a lot of these questions out there that are actual CPA exam questions. And the nice thing is things like bank reconciliations have not changed. So you can actually get some of these things that are, actual CPA exam questions for the stuff that we're covering today, even though it's a closed test today. Some of these, there's, a lot of these questions are still out there that are similar in style and in content to what you get on the CPA exam. So anyway, having said all that, what we're going to do is, so this is a file I sent out earlier, and you can't see because I'm not sharing my screen. Sorry about that. So there's only 5 questions here. I'm going to start a poll. Now the poll has 10 questions. So for questions 6 through 10, you can either click on the no questions line or just put any letter in. It doesn't really matter. So let me start a poll here. So we only need the first 5 questions of the poll, and basically you guys get extra credit points added onto your thing, depending on how the group does. So everyone's going to do this. Everyone who wants extra credit points should do this. So you're going to put in what you think the correct answer is. So for instance, for number 1, if it's A, B, C, D, whatever it is, you will put this in and poll in the poll for number 1, you put in A, or if your answer is D, you put in D, but you get the idea. And so when you're done with this, now you got to do all 5, and then 6 through 10, you can actually put anything in. If you put in no question, that's that's what that's there for, but it doesn't matter. But anyway, so if the class gets 50%, now since there's only 5, I'll say if you get 2 of them, I hope you guys get more than 2 of them, right? We'll add 2 to the test. If you get 75%, which would be, I will say 3 for this one. Usually they're a little more. That's 3. And if you get 100% of them, these are tough. So you get all, I'll put +5 on the test.
Are we supposed to answer them right now?
Yep.
Oh, okay.
Yeah.
I
Now,
just closed.
okay. Now go ahead and do it. Do it on your own, and then we'll get
Yeah.
back together. We'll.
Okay. Once we're done, should we submit it?
Yes. So when you're done, do the 5, 6 through 10. Put whatever you put. You put any answers to that. It doesn't matter. They're not going to get graded. And that, but answer 1 through 5, and then we'll put them together, and then we'll go through and give out the correct answers.
Okay. I just closed mine. So how do I see it again? It was showing on my screen.
I think if you go to minimize, it might show up. Let me see.
Not seeing it anymore.
So it's just these 5 questions from the Word doc?
Yep.
Okay.
Let me see it.
Wait, where do you see the questions? I don't see them.
They're in the handout.
Yeah.
The multiple choice handout.
It's from the email we just got like 10 minutes ago or before class.
Yeah, it's also in Blackboard. A bunch of stuff up here. Okay. Yeah, look at it. Say about chapter 10, 11 multiple choice. I think it just says MC questions.
I'm sorry, where do you want the answers?
There's a poll in the bottom of the Zoom. If you click on that, I think the thing should pop up.
So for 6 through 10, you said leave them blank or whatever, right?
Yeah, 6 through 10. You can put anything in. Oh, no, don't leave them blank. I think you have to put something in, but anything you put
Okay.
in won't matter. I think,
Okay.
I think I put the thing on there about there is no question, but don't worry about it. Anything you put on there won't matter. Oops, wrong. I tell you what, if you're finished with the multiple choice question, how many? We got most of it. Maybe I'm talking too soon. Never mind. Ignore that crazy person. Is anyone still working on it? Yeah, if you are, that's fine. I just want to know if anyone's still working on it. If you can either say something or text me. Okay, I'll close the poll in another minute or two here. Okay, I'm going to close up the poll here. Let me share the results. Okay, so these are the results. Number 1 is B is correct. And we did that. You remember that on the bank statement, we had those extra checks that showed up, that if they left them off their bank record, would show that their cash would look like it was more than it really was. So that was actually sort of one we did in the handout. Number 2 was a difficult one. And you guys got it right. Yeah, and that one, the ending balance will certainly be on the confirmation, but it'll also be the beginning balance of the January 1st cutoff statement. So the cutoff statement, the January 1st entry on the cutoff statement will be the ending balance from 12/31. So you could do it off that one too. Again, that's kind of the stuff they they like to put on there. Okay. Now the very hardest one on here. Okay, so our rules are that it has to be recorded on the books at the same time or before. And the two that break that rule are these two.
What was the answer for number 2?
Oh, A.
Hey, okay.
B is the correct answer here, the one you guys picked. I thought I had a different problem here. I thought it was a different. Let me take a look here. And this one, you can see they record at 2 different times. They should be recorded at the same time. And you'll notice that they put the receipt in the book earlier. This makes it look like they have more cash than they actually have. So that's a, All right, let's go to number 4. Number 4. Yep. Understatement of outstanding checks. I still have that one up there. I don't have it up there. Hold on a second. Nope. Close this one. Oops. Repeat the same thing. Notice that these outstanding checks, if you were to make those less than they really are, it'd make your corrected balance look higher. So that's what that's what this one's getting at. And this one is B. Well, you guys did fantastic on those. So some of these are harder, some of them are easier, and that's kind of what you get on the CPA exam. Nowadays, they weight those. So you guys get +5, and I will put that on here. It's not easy to get. So what I'm going to do is I'm going to send out. I'll try to get it out tonight. I'm going to redo the I'm going to do my the chapter 10 and 11 exam, but you guys will get all of the extra credit points on there. Well, very good. Let me. Any questions on this? Is there one you want to go over specifically? The hardest ones on here are probably this one, the transfer schedule, that if you don't recognize the rules, that this one's a tough one. And I think that this second one here is also kind of tough, although you guys did very well on it. But yeah, this was a tough one. And by the way, just so you know, the CPA exam currently, okay, I'm going to stop sharing the poll. We'll save the results. All right. Yeah, so the CPA exam, they have basically 2 tiers of questions. They have easy and then more difficult ones, and the more difficult ones count for twice as much as the easy ones. So they actually have so it's not strictly how many of them did you get right. They'll actually give more points for those that are more difficult and less points for those that are easier. Back in my day, back when these were put out, they didn't do that. They would, you know, they just give you the score based on whatever. So, but anyway, just so you know that there are CPA questions. So the harder CPA questions, the ones that take you the longer, are usually worth more points. Just a little side note there. And I say that because back in my day, they say if you come across a really bad one, you know, just skip it. You know, because it's 1 point, and you know, you get the other 60 points or whatever, and don't worry about that one. But those are worth more. The harder ones are worth more. Okay, well, I think we'll do one more thing and then we'll take a break, and that is this is actually, you don't have to do hardly anything for this one. This is the SOC reports. I sent it out, System Organization and Controls. They call them SOC reports. And these are really big with the CPA, the AICPA right now. These are definitely going to be on the CPA exam, and they're going to get more on there. And it's a little bit, I don't know. These are actually copyrighted, these different kinds of reports. So, I mean, they copyright all their stuff, but you know, it's anyway. These are the important things on the CPA exam they talk about. And here is the problem that. Oh, here's the scenario. This is for mostly for the service industry, service organizations, companies that provide services. They might do payroll. They might do your internet services. They might do your e-commerce. They might do, you know, it's when you farm something out to people on the outside. Now, there are controls. So for instance, if you're doing your payroll, there's controls that you have to go over the payroll. Just because you have somebody on the outside doing it doesn't mean, you know, oh, everything's fine because somebody else did it. They have to know if that other group that's doing it is on the up and up, that they have the proper controls and all that kind of stuff. Now, you would generally think that they would, but someone has to go in there and see. Okay, so like payroll services, ADP is a company that does payroll for a lot of places. Now, let's say that ADP has 10,000 customers that get audited. All right. Okay, well, here's the thing about ADP. You can't have 10,000 auditors walking through ADP checking their controls A, it's impossible. B, it's a waste of time. What they would do is have an audit firm come in and do a report. That report would go over the controls, and that report is what you rely on if you're an external auditor. So I'm auditing IBM. Now, IBM probably doesn't have ADP do its payroll, but maybe it does. IBM does payroll for other people. It's probably a bad example. Let's change it. Let's say General Motors. Let's say we're doing General Motors, and General Motors, let's say, has ADP doing their payroll. When we come into audit General Motors, we are going to look for what they call a SOC report. A SOC report is this system organization and controls, but it is for service companies, and someone will have gone into ADP and done one of these SOC reports. And these SOC reports are basically saying whether the controls are can be relied upon. So the audit firm itself isn't going to do that, but they are going to get a report from another organization. As long as it's a reputable firm, they're going to take that SOC report and rely upon it for their audit. Okay. This is the one that auditors for financial statements are going to use, the SOC 1 report. Now, in the CPA exam, they're going to have all three of these. They can't put all three of these. So there's a SOC 1 report, which is only for financial reporting. The SOC 2 report, which is the heavy duty, everything, look at everything in it. We're going to look at security, privacy. We're going to look at outages. If they have outages, they're looking at everything that you can think of. They look at for the SOC 2. So the SOC 2 is a very extensive report, and it's aimed at companies that are trying to decide whether they want to go with, ADP for their payroll. It's more than just financial. Financial will be in there, but it's more than just financial. It's everything. Down here, we have the SOC 3, and this is just for the general public. This is for somebody that says, gee, I don't know, is Amazon secure? They should be, I'll look up and see if there's a SOC 3 for Amazon. That's what I should do. I'll look up and see if they have them. I would bet that they do. But anyway, a SOC 3, and it's usually, I don't want to say dummied down, but it's put in more less technical terms of what the controls are over it. So SOC 3 is for everybody. SOC 1, SOC 2 are restricted. SOC 3 is for everyone. So as auditors, we use SOC 1. I might look at SOC 2, but only if there's a issue or a problem that was had. And then SOC 3 is for everybody. And this is for the average person that wants to know, gee, what are you doing to, protect my credit card number if I put in an order at Amazon, that sort of thing. Any question on that? Okay. Well, do you guys want to take a break?
Is this going to be on the test?
This will not be on the test. I put it along with the cash one because a lot of times payroll has a cash account. Also, things like lockbox services. We talked about the lockbox for cash. Those we'll have to get one of these SOC reports. So if you have Chase Bank has a lockbox system for you where all your customers send their money to Chase Bank for you to collect, there would be a SOC report for that, a SOC 1 that you look at. Again, the reason being you can't have a zillion auditors walking through Chase Bank looking at all their controls. But at the same time, you can't just walk away, turn away from it because it's, you can imagine the payroll for General Motors would be huge. So you have to get some comfortable. You have to get comfortable with the internal controls over it. And that's what these reports are. And again, these are made by the AICPA. They came up with these, and they're going to put it on the CPA exam. So as a general rule, the stuff that the AICPA makes shows up on the exam. They don't just do the stuff for nothing. They'll put it on the exam. So, and then they came around and said that these are going to be on the exam. So SAC 1, SAC 2, and SAC 3. When you get close to taking the exam, you can get with these. So you guys want to take a break? Want to take a break, or you want to just push on through? I can put up another poll.
Take a break.
Take a break. Okay, let's take a break. Let's be back in. Let's see here. Let me. We'll say we'll start the sampling order. We'll say be back in what? Be back at 7. I don't need to put PM. Come back at 7 in the morning. But. Okay, so be back at 7, and we will start in on. Actually, I put it up on the screen. We're going to start in on the. Something I don't have on the screen. We're going to start in on the sampling overview. Okay. Okay, on your screen though, this is an Amazon SOC 1 for the web services. So Amazon Web Services. So if you're a company that relies on Amazon Web Service, this is the report. Starts out, this is the auditor's report. Goes into a little bit of what they did. This is, by the way, this is a SOC 3. This is for the general public. And you know it's not a SOC 1 or SOC 2 because I got it. if it was a SOC 1 or SOC 2, those aren't available to the public. And down here's the opinion. It says, in our opinion, AWS's controls over the system are effective throughout the period of October 1st, blah, blah, blah. And provide reasonable assurance that its principal service commitments and system requirements were achieved based on the applicable trust services criteria. Ernst & Young. So this is what a SOC 3 looks like. And by the way, then it goes into, I think I send this out. I'll send this out to you guys. It goes in all kinds of stuff, you know, all the but even the stuff down here, though, you'll notice it's not really in technical jargon. It's not in, you know, the jargon of internet security and all that. It's basically so that those normal people of us can actually read the thing. Okay, so that's what the SOC 3 report looks like. Let me get out of there. Okay. So this is the last of the sampling handouts. And it's kind of, it kind of picks up some stuff that wasn't covered in the first two. And then it goes into test of controls. And I think page 5, I think, has those. But anyway, so we'll go through some of these. Okay. In sampling, we like to pick a random sample. Why? A random sample is usually the best, but why? In your stats class, they'll always talk about a random sample. What is so great about a random sample?
It's easier and it doesn't consume a lot of time. It's not time wasting because you just have to pick, the sample.
Yeah, it's true. It's true. But why do we want it to be random? Why don't we just have? Well, here, let me give you an example of a systematic one. A systematic one. This is, say, the second best. Oops. And that's where you pick every other. So you made, for example, choose every 10th item. Now, this is an example of a systematic one where you systematically every 10th item you pick the 10th one. So invoice number 10, invoice number 20, invoice number 30, you get the idea. This is not as good as a random sample, which you randomly have something picked through a random number table or a random number generator or something like that. You pick a random sample, but the question is why?
Because there's no rule to follow.
Yeah, well, yeah, it's because this is most likely going to be unbiased. It's going to be unbiased. It could be that every 10th item is some kind of a special item or whatever. It could be that you just happen to hit everything every 10th item. Not only that, there's items that if you're doing this every 10th item can't be picked. Item number 7 cannot be picked. you're taking the first 10, right? So it's usually unbiased. And also, let me put this in 2. So it's usually the best because it's unbiased. And so because it's unbiased, it is the best predictor unbiased, the best predictor of the population as a whole. So that's what we do. We like the unbiased ones, and there are tables and stuff that you can use to get unbiased samples. You can also do it on the computer. A systematic selection we just kind of talked about here is when you choose every nth one. It's not bad. You can have a random start, and that will make sure that everything has a possibility of being chosen. But there could be things that happen in the repetitiveness of it that are that will skew your end results. So systematic selection isn't terrible, but it's not as good as random sample. Okay, now it can be repeated with the same results by others. So in other words, if you pick a random sample, you can give that same random sample to somebody else, and they can, they'll find the same thing. So however it was picked out, no, I don't want that. However the random sample was picked, it can be repeated with the same result. So if you have a random number table, you can say, okay, we chose column 3. Everyone can go down column 3 and choose a random sample. It'll be the same sample, randomly picked, the same sample that everyone can use. Same thing here. Okay, so these two can both be repeated. These two are the ones you'll see mostly in auditing. Because in auditing, everything has to be repeatable with the same results. You may not have the same judgment. You know, maybe you think that $10,000 is material and someone else thinks that $10,000 is immaterial. That's fine. But the results should be exactly the same. Haphazard selection is when you blindly reach into a file and pull out items. So it's sort of like just closing your eyes. You go to the file cabinet. I'm getting shorter. Go to the file cabinet. You close your eyes and you pull out 10 items or however many items you need. Now, that's not repeatable by somebody else, right? I might do that. I might pick, someone else comes in and close their eyes, they'll pick 10 different ones. So that one's not really a good one. Maybe I'll go ahead and tell you I have an old auditor story on that one. So haphazard, I actually did one of these one time because I couldn't do either of the other two. I got a random numbers set up to pick up files, and it was at US Steel. And US Steel has huge buildings because they used to have armies of people that would do invoices and stuff. US Steel was around before calculators and all that, right? So they had all these people that would be doing these invoices. They would have adding machines and stuff. Rooms full of them, huge rooms full. So anyway, at the steel mill in Gary, Indiana, there's tons of open space. If you want an office, in the plant, you can get it. You can get a huge building. I mean, you'd have people that have their own rooms that would be 20 by 20 offices. So anyway, I was in there doing a billing department, and everything's going fine, and they're all in this one end of the building. Okay, so then I need to do these one special ones. It was they had to do some kind of unique billing stuff for some steel that they had. Anyway, it was down at the other end of the building, which is like 300 feet. I mean, it's a big building, and so they say, "Oh, you got to go talk," down. Okay, so they walk down the hall. I hear all these voices, talking. And I go in the room, and it's one person. The woman who was there was a severe schizophrenic. And I said hi, and she just looked at me and kept talking about something else. And I said, okay, I got these things I got to pick. I got these things, these are the invoices that I have to find. And she looked at me, said something. I don't know if she did. Sometimes she just started laughing, and just it was the strangest thing. I didn't know how to take it. I mean, I was like a kid, like what? So I don't know what to do with this. I said, well, so I started going through the files, and they're all over the place. I can't find any discernible system. So I got all these things. I can't find it. They're just. So I go back down to the other people. I said, well, what's going on? And they said, well, yeah, she's a schizophrenic and she refuses to take her medicine, but it's a union thing. They can't force her to take her medicine. Okay. So I go back down, I call my boss. I said, look, I don't know what to do here. The files aren't in any order, and I can't get any information out of her. I don't know if she even knows I'm there or something. I don't know. So anyway, we decided just to pick a haphazard one where you just go in and I chose I think it chose 10 different boxes. I think it chose 3 out of each one or something. I can't remember what it was. But anyway, we used and tested those, and the kicker to it is every single one of them was perfect. She was absolutely competent in her job, but it was just a very strange thing, and I felt horrible. I felt like I should call somebody or something, but it was this very strange thing. And by the way, she was down there by her own choice. She didn't want to be around other people, and that I guess she was retiring in like a year or something. So it was a deal that was made that she could be there by herself at the other end of the building. And that was a very strange one. And like I say, there was, I couldn't find any way to find anything from it. So, we made some recommendations, but I don't think I have, it was kind of a union thing. I don't think anything happened with it. But at the same time, what she was doing, and that's one thing I didn't know then that I know now about schizophrenia is that usually the people who are schizophrenic a lot of times are very intelligent. It isn't that they are just crazy or something. It's that they're extremely intelligent, and she obviously knew what she was doing. But okay, block sample. This is probably the worst one. And a block example is when you take an entire block. let's say October sales. So a block sample is when you take the entire block. For instance, you're going to test sales, and what you do, you take all of the October sales. Now, obviously, there's problems with this one. You know, if there's going to be a fraud, is it going to happen necessarily in October? No, right? It could happen anytime. So yeah, this is a bad one. And not only that, items cannot be picked from any other block. So if you know if something happens in January, it's not going to get caught. There's no chance of getting caught. Block selection is for blockheads, is an old saying, but you generally don't do that. Okay, stratification. So stratification, this is for example, if we have these accounts receivable, they're like $924,000 worth, and here they are in the entire population. We have 1 through 10. Looking at 1 through 10, which ones would be the most important for you to look at? Which one of these 10 items, all right, if you're an auditor, which one of these 10 items are probably going to get your attention?
The ones with the high dollar value.
5 and 6.
Yeah, 5 and 6 probably would be the two that you'd really want to look at. And looking through here, if say number 3, you know, if this one was, if the whole thing was misstated, you probably would care. It's probably, you know, there's no way $28 is going to be material to, you know, $900,000. So as you go through, you say, okay, in other words, not all of these are of equal interest to us. Here's a question for you. Which one is most likely fraud?
Five and six.
Probably 6. One of the weird things about fraud is a lot of times people do it in round numbers. It sounds crazy, but a number,
Okay.
yeah, they, you know, you don't usually have sales that come out to be 25,000 exactly. You know, be $25,342.28. That's a normal sale, not $25,000 even. So, what is that? 6. So easy, you know, 1,000, 2,000, 5,000 even. That's not usually the way business works out. So, you know, that would probably be the one that you'd want to take a look at the most. Okay, so because these bigger numbers are more important, you might break this up into they might stratify it. In other words, might break this up into a number of different of different samples. For example, maybe if things that are say 0 to 1,000, maybe you'll take, I don't know, I was making these up, 5% of those. When they get bigger, like say 1,000 to 10,000, or 1,000, 1 penny or whatever to 10,000. You know, it might be a little bit more. And maybe you say, okay, let's take 20% of those. Right, these are a little bit more interesting. Okay, and the ones that are, say, over $10,000, maybe you take 100% of those. So you stratify the sample. So this would be a sample. You know, here'd be your first sample. You take 5% of those. Your second sample would be that. And this one technically isn't a sample, but it's a layer. You know, you're not sampling, you're taking 100% of it. You know, there is no 90% or anything like that. It's if you're taking 100% of it, it's 100%. So, you know, in this case, maybe you'd have 2 samples going on, and then this everything over 10,000 would be, you know, 100%. Any question on that? Again, just because, you know, like you said, these two, you know, these are the interesting ones. That's an interesting one. This one might be kind of interesting. I mean, it's not huge, but it's, you know, it's up there. So again, so that's stratification of the sample. So stratification is when you take the sample and say, okay, we're going to stratify it, make, you know, the little ones can still be picked. So all the little ones can still be picked. We're not excluding any of them, but they're just less likely to be picked. They're less likely to be picked than, say, these, the 1,000 to 10,000. And if they're over 10,000, there's a 100% chance of getting picked. Okay. Types of sampling. Attribute sampling is a very important one. On the CPA exam, this is tested the most. Or in the past, it has been anyways. Attribute sampling are yes/no tests. These are usually used for tests of control. And tests of controls are the controls that are not. So, for example, does the manager approve all returns? And so you could do testing on that, and it'll be yes or no. You know, so you'll get a return and see if a manager approved it. They either did or they didn't. So these are yes/no tests. They're kind of like flipping a coin, you know, heads or tails. But we usually use them in the yes/no context. So these are yes/no tests. Does the manager approve all returns? Yes or no? So, you know, you take out you'll look at a bunch of returns and see which ones were approved. And if there were any that were not approved, that's a no, that's an exception. Discovery sampling is not used as much. This is usually used to detect fraud or assurance that exist. It can be used in both ways. Discovery sampling is for discovering stuff. We don't really do this too much in auditing, unless there's some reason to believe. For instance, let's say you get a tip that says that whatever, that someone's fraudulently reducing the invoices sent to certain vendors or something like that. You know, that there's kind of customers, whatever, that it is usually some reason for it. And what you do is you take a sample and you keep going until you hit an exception. So if you do hit an exception, you can actually do, there's ways to get numbers that you can actually figure out. Okay, if I find in the first 300, I found 2 of them that were exceptions. What does that mean overall? How bad of a problem is this? You know, and you can kind of make projections that way. If you're looking for things like fraud, you can also go, you know, however far along you go without finding an exception. If you get to 100 without finding an exception, okay, that gives you a certain level of confidence. You go to 200, it's without finding anything wrong. It gives you even more confidence. Maybe it goes up from 90 to 95%. If you go to 300, maybe it goes to 99% or whatever it is. The further along you go, the more assurance that you get that there's not going to be a problem. So it could also be done to see, give you some assurance of whether fraud exists or not. And sometimes, I mean, you know, sometimes people that are trying to help necessarily don't always do that. I can tell you, this happened several times. I was auditing someone coming, oh, I got to tell you something. I'm like, what is that? And they tell you something, and you go look into it. It's, you know, there's nothing to it. It's just people talking. Okay. Classical sampling. We already did this. Next week, we'll review it. Mean per unit. Ratio estimation and difference estimation. Oh yeah, you guys did those. As did this monetary unit sampling. We finished that. I think we finished that last week, didn't we? We finished the monetary unit one, didn't we? I think we did. I'm almost positive we did on that.
Yeah, yes, we did.
Yeah. I think it's in there. You can turn it in. It's in there. I think it's in the submit. I'm not sure where. Okay, dual purpose is when you use a sample for more than one item, for more than one test. And usually it's done like this. For instance, test the controls. Maybe you need 100 items. Substantive testing. Oh, by the way, I should put this in. I'll type it in here. By the way, these up here, and I don't think I've made this clear, and I should have. Classical sampling is a substantive test. And so is Maybe I'll do okay. And so is this down here. This is material unit sampling. These are both substantive tests. They're both for dollar amounts. So classical sampling, mean per unit, all that kind of stuff, those are for dollar amounts, and say so is monetary unit sampling, those are for dollar amounts. So you might be picking a sample for test controls, and you also might be picking a sample for substantive testing. Now, notice something here. You know, if you're already picking 100 items for test controls, pick them randomly, you know, going through and picking them. And then you're also going into this material misstatement, you need 500 items. Instead of taking 500 items, what might you do if you want to be more efficient? Instead of taking 500 items, you go pick what? Well, you already got 100 items here. You can use those. So you'd only have to pick 400 for the substantive testing and to make the 500 total. So these 100 could be used for dual purpose testing. So, you know, the dual purpose here would be the, yeah. So these test controls, 100 items would be for both tests, and then instead of down here, instead of the 500 items, you could say, okay, I already got 100, so I'm going to pick an extra 400 ones. And then I'll just use the ones from the previous one. So you really only have to pick 400 of those, and with 100 of those to get your 500. Make sense? And just so you know, in auditing, we're always slammed for time, and external auditors especially are slammed for time. So anything they can do to reduce time, they'll do it. You know, and again, picking 100 items, if they're already chosen, just use those, add 400 more, and do the substantive testing. Okay. We've already talked about this a little bit. Sampling risk is the risk that your sample does not represent the population as a whole. Yeah. And again, if you audit to the 95% level, 5% of the time, your sample is not going to represent the sample as a whole. It's just the way it is. It has to be. So you know, 95% of the time you'd be right. Or 5% of the time your sample is not going to represent the sample as a whole. And there's no way around it. Well, I shouldn't say. You take a larger sample, you know, it'll tighten that up. But there is going to be some, as long as you're taking a sample, you know, there's going to be some play in there that it does not represent it. So that's sampling risk. Sampling risk is not due to errors or anything like that. It isn't because you're a bad person or anything like that. It's just the way sampling is, that if you audit to the 95% level, 5% of the time you're going to be wrong. And you know, there's nothing you can really do to get around that. No, and we'll talk about some of it later on. We'll talk about some of the stuff here. Okay. Yeah, we already talked about kind of this stuff. You guys get all the bell curve stuff. That, you know, the more confident you want to be, basically, it's going to take based on the same sample. You know, that you're, for instance, you're 99.7% positive is between whatever, 85,000 and 115,000. Now, between 10,000, you're 95% level. So at 90,000 and 105,000 or 110,000, and so on and so forth. So this is just basic stat stuff. Man. Okay, so for sample size, and this is kind of hits into multiple choice questions you'll see on the CPA exam. So, a lower sample risk will have a higher allowance for sampling risk. And you see that up here. A lower sampling risk, so 0.3, will have a higher allowance. Because you're more sure of it landing in that extra area on the sides. Okay. Test the controls. These are tested quite a bit, at least in the past. These have been tested quite a bit on the CPA exam. Okay. And it's basically, we want to be able to rely on the controls. And you might want to be able to rely on the control for a couple of reasons. First of all, it might be cheaper to test the controls, see if the controls are working, then reducing the amount of substantive testing. It could also be, and this is what you run into with larger companies, that it is impossible to do without relying on external controls. You're doing inventory for Walmart. Is it possible to go to all the Walmart stores and do all the inventory and all that? You're probably going to rely more heavily on looking at the controls. What controls do they have over inventory? if you can rely on those controls, it can reduce the amount of testing you have to do. So there's some companies, like say large, really large companies, a lot of times it's impossible to do the audit without it. Furthermore, if it's a publicly traded company, they must look at internal controls. Public traded companies are audited on their controls, on internal controls. So if it's a publicly traded company, you have to test the controls. To do the audit, you have to test the controls. There is no, gee, I don't want to do them. I want to rely on substantive testing. Not for a publicly traded company. They have to have an audit report on internal controls, which means you have to test internal controls. Okay. And internal controls of a company, companies have lots of internal controls. Ones that we're looking at are specific for financial reporting. They may have controls in human resources that maybe don't have as much impact on us. They may have controls over employee behavior or something, whatever it is, that, dress codes and all that kind of stuff that have nothing to do with us. So we're really only looking at those things that are for the identified material misstatement. And these are usually yes, no tests. We talked about that. Okay. So for an example, they require 2 managers on checks written for more than $5,000. So we take a sample of checks written for more than $5,000. And we would look through them and see if they had 2 manager signatures. They either do or they don't. So they either have 2 manager signatures, yes, or no, they don't have them. So kind of like flipping a coin, it's heads or tails. Same thing here, it's yes or no. Okay. The auditor allows for an error rate of 7% on the sample. They took 200 checks. And the allowance for sampling risk is 2%. Now, you'll notice something here. For test of controls are not dollars. Right. So when they give allowances, it's going to be as a percentage of how far off they are, whatever the amount is that you'll accept. If they have an error rate of 1%, 5%, or whatever it is, it's going to be a percentage. It's not going to be a dollar amount because you're not testing dollars. For these checks, you're actually not testing whether they are written for the correct amounts. You are testing to see whether 2 managers signed off on it. It's a yes/no test. Okay, so the allowance, instead of being in dollars, $5,000 or $10,000, whatever it is going to be in percentages. So because you're not testing for dollars. Okay. So they do the test, and this is what they come up with. Checks with 2 signatures. The 200, 194 had 2 signatures. And checks with only 1 signature, we had 6 of those. So what was the error rate? Yeah, you guys sleeping? You guys are sleeping, aren't you? Turn on your mics. I hear you snoring. So what's the error rate?
3%?
Yep. Yeah, so they had 200 items, so 6 errors. Yeah, was it 3%?
Yeah.
Yeah, 3%. Yeah, so this would be our error rate. Our error rate would be 0.03 or 3%. Again, it's not in dollars because we don't look at the dollars. Okay, so the allowance, so our error rate is 3%. So our allowance for sampling risk is 2. So it kind of looks like this. Is 3% plus or minus 2%. Okay. This is the 2%, by the way, if you're wondering where I got the 2% from. So they're saying the allowance for sampling risk will be plus or minus 2%. The sampling risk was 3%. Sampling rate, I should say. Is 3%. So would we take these results? Would we rely on the internal controls? Let me make this a little bit more plain. Yeah, I did it wrong. So this is our range here. Let me make it into it. And we will allow for 7%. So would we accept this as being able to rely on the internal controls? Relying for an error rate of
Yes.
yeah. Yeah, both these are less than that. Now, quite honestly, this one we probably wouldn't even do the 1% because if it's less, that's even better. But the most it could be is 5%. And if we accept it up to 7%, We're good. So it would be yes, we rely on them. So our best estimate would be 3%, but it's a sample. So it could be plus or minus 2%. It depends on whether they set it up as a one-tailed test or a two-tailed test, but if we think about the normal bell curve, it'd be a plus or minus. Okay. I'd say, let's do this table because this kind of relates to what we just did. Okay. So here is a table sometimes you'll see for, we're going to talk about, this is for internal controls. We'll also have one down below for substantive procedures, which I'll put down here. Okay. So up here, this is the actual effectiveness. So this is the actual effectiveness of the internal controls. Now, as auditors, we don't know this 100%. We won't know this 100% unless we test every single thing in the place, which we probably won't do. So the actual effectiveness of the internal controls is either adequate or it's inadequate. Now, when the auditors, when we do our assessment, we're going to try to see whether they're adequate or inadequate, right? So this is what we're doing our testing for. So, for example, if it's adequate, and we come up with a decision that it's adequate, that's correct, right? We came up to the correct conclusion. And same with the inadequate. If we said that they're inadequate and they really were inadequate, this is also correct. Oops. I highlighted that was not correct. Okay, so if it's adequate, inadequate, it's correct. If it's inadequate, that's fine. Now we start running into the problems. Okay, and that is when they're mismatched, right? This, if we come out that we say that it is inadequate, and it really is adequate, so their controls are working fine, but we don't think they are, we will assess the control risk too high. In other words, we won't rely on the controls for our audit. We'll get our information through sampling or some other way. So assessing the control risk too high, this is, it can be a problem that it can lead to an inefficient audit. You could have relied on the controls, but, and by the way, remember your test that, at 95% level, 5% of the time you get the wrong answer. So if you assess the control risk too high, that means that you will not rely on the controls. Okay, so we really could rely on the controls, but we didn't because our test, for whatever reason, didn't match with the true value of the population is. So this one is a little bit of concern. The audit may do extra work you really don't have to do. But again, we don't have a crystal ball. We don't know exactly what the actual effectiveness of the internal controls are. We're doing testing to get an estimate of it. Okay, over here, this would be kind of the opposite end. Darn it. It says control risk too low. And this is when auditors, oops. Then the auditors rely on inadequate controls. So you do your testing, you think everything's fine, when in reality, they're not. All right, so this is when you think that everything's fine, you do your tests, comes out that, okay, the error rate is whatever percentage, it's low enough, you say, okay, we can rely on the controls. When actually it was just your sample, you just happen to miss, the problems. So auditors rely on inadequate controls. Okay, so let's call this one A. Let's call this problem E. Which one is worse for auditors, A or B? Which one has the most danger to it, A or B?
B.
Actually, it's A. Because A, you think everything is okay when it's not.
Okay.
Yeah, so A, if we assess the control risk too low, we think it's low, we think it's better than it really is. We think it's 5% when really it's 10% or something like that. We're going to rely on those controls when we really shouldn't be. So actually, A is more the trickier one, is because you think everything is okay when actually it isn't. So that's one. This one, you're not going to be as efficient. You're going to, okay, you do some extra work that you really didn't have to do, but again, 95%, 5% time you're going to be wrong. It goes along with sampling in general that you may have to be a little inefficient at times. But this is the one that actually scares. These are actually the ones that are frightening to auditors, and that is when you think everything is okay and it's not. This is an audit failure, basically, that you think everything's okay, you rely on it, and you shouldn't be. Okay, well, we'll stop here. And I am going to send out the chapter 10, 11 exam. I won't get it out till tomorrow. I'm working on it tonight. If I get it out, if I do get it done right at night, I'll send it out, but most likely tomorrow. Let me write this down. Again, if I get it earlier, I'll send it out earlier. And it'll be due on a week from, maybe due on the Friday of next week. So a week, a little more than a week to do it. So I'm going to send that out later on, by tomorrow. If I do get it earlier, I'll send it out earlier. I was looking at it yesterday and I decided to redo it. But anyway, so I'll send out the chapter 10-11 exam, and it'll be due the Friday of October 22nd. Any questions? Okay, well, I'm kind of all funned out. I don't know if you guys are, but we will stop right there. We'll finish up this handout next class, and I'll send out the exam, the chapter 10-11 exam by tomorrow. And that'll be it. Now, any questions? And the SOC stuff will not be on the exam. That was more of me just giving you information on it. Now, the new developments in auditing. So, okay. Well, I will see you guys on next week. And by the way, on the test, if you have any questions on the test, I can't give you the answers, obviously, but if you want clarification on anything, feel free to reach out to me. Like I say, depending on what you ask, I don't know if I can answer it. But if you have questions like, does this mean this or that, feel free to contact me. But I'll be sending that test out tomorrow. Questions? Okay. Well, have a good evening, and I will talk to you in a week's time.
Thank you.
Thanks, guys.